Hey, are you Poornima?
Oh, hi, yeah, I'm Poornima.
Francisco.
Nice to meet you, Francisco.
Melody's going to be a few minutes.
Okay.
You mentioned you might want to get styled for the shoot.
Yeah, that would be great.
Okay, so do you have anything in mind?
Maybe just like a trim and a blow.
Okay, so what kind of, want to take it up in the back or?
Not too much, because I just had a pixie earlier this year and I want to grow it out.
Okay.
So maybe just like an inch or something, I don't know.
How about a mohawk?
Welcome to the 8th episode of Femgineer TV, brought to you by Pivotal Tracker. I'm your host, Poornima Vijayashanker, the founder of Femgineer. Femgineer is an education company where we teach innovators how to build software products so they can find freedom in their careers, enrich other people's lives, and make the tech community a lot more inclusive and flexible. So there's an ongoing debate in the tech community today of whether we're in a bubble or not. And you've probably read the headlines of companies that have billion-dollar valuations. You might be wondering, what are the outcomes? And if you're a founder, you might be wondering, where did people get all that investment capital and how you can get some investment capital for your startup idea? To help us out and walk us through the process of going from seed to Series A and beyond, I've invited the CEO and co-founder of StyleSeat, Melody McCloskey. StyleSeat is an online destination that connects beauty and wellness professionals to clients. It was founded in 2011. Over the past 5 years, Melody has grown StyleSeat and raised 3 rounds of funding, totaling $39.9 million. We're here today to talk to Melody about the fundraising process and have her share what it's taken for her to go through the various rounds of funding and hopefully give you some insight as you're thinking about raising capital, either inside the Valley or out. Thanks for joining us today, Melody.
Yeah, thanks for having me.
So we met a while back, even before you started StyleSeat.
Yeah.
And I think it's great to see all the success that you've had over the past 5 years of starting it.
Thank you.
You're welcome. Yeah, before we dig into StyleSeat and fundraising, why don't we just talk a little bit about your background? Like, how did you get into tech?
Sure. I kind of fell into it accidentally. I graduated school and moved to San Francisco with the idea that I would save money and move back to Paris. I lived in France for a little bit, during school. It was cheaper back then, but still the idea of moving to San Francisco to save money is ridiculous.
Sure.
I don't know what I was thinking. But when I moved here, I sort of started to meet people that were starting companies and working in tech, and it was the first industry that I was really, really excited about. Mm-hmm. And the more I learned about it, the more I wanted to be a part of it. So I got a job at a startup, kind of doing all things. There was just a couple people there. It was a video startup. Mm-hmm. I learned a lot about video technology. It was it was a product position in addition to marketing and PR and a lot of other things. But that was my first exposure to the software process and how products made and done and deployments and all of that stuff. And after that, I worked at Current TV and did something a little bit similar. It was a business ops position and also had a lot of product exposure and basically figuring out how to take Current TV, which at the time was a television network, and help them figure out how do we take these TV shows and distribute them online. So it was a lot of things around asset management, creating new type of assets, storing them in CMS, distributing them to partners, and basically helping to drive growth and revenue numbers. Nice. That was really fun.
Yeah.
It was kind of like my own little startup within a bigger company.
Okay.
Because I had engineering team, other folks on the team sort of playing all the different roles, and we were in charge of revenue and growth for the business, and also building this completely different area of the website and of our brand and video assets. And through that experience, I loved it so much. I was like, I want to do this, but I want to do this at my own business.
Yeah. So then what inspired you to take all that knowledge and expertise and put it towards StyleSeat?
Yeah, well, I didn't really have much knowledge or expertise.
Okay.
Honestly.
Yeah.
I'd had a lot of really great learning experience through that process. But it was definitely not something that I'd done before. I'd never started a company before. I was inspired by the industry because, number one, it's a massive vertical. There's over $80 billion that's spent every year in the U.S. in salons and spas in both services and product sales. And that was really interesting, a lot bigger than a lot of other markets that I had researched. In addition to that, I had personal experience in trying to find a stylist in San Francisco when I'd moved there, and it was horrifying. You either go to review sites and you search through hundreds of reviews and try and pick out names and hope that they're a good person for you, and go drop several $100s on cut and color and just cross your fingers, or you ask, a girlfriend, which is also hit or miss.
Right.
And I wanted there to be a smarter way. And the more I spoke to stylists, salon owners, estheticians, barbers, the more I realized a lot of them were running their business via pen and paper. And that, it was clear that technology could solve problems for lots of different areas in the space.
That's great. Now, you've gone through 3 rounds of funding. You did a seed, a series A, and a B. And I know there's a lot of literature out there on how to go and raise capital, signaling, and all that stuff. But what I want to focus on for our viewers today, and I think it'll be really valuable, is to talk about what it took to get through each of those rounds. Because I think people are really confused today about what's a seed, what's a series A, what's series B. There's a lot of talk, there's a lot of movement in the market, but I really want to guide our viewers into each of those rounds since you've been successful, but also talk about some of the challenges. So why don't we get started and talk about how you got introduced to your seed investors?
Sure. So we actually bootstrapped for the first
great.
A year,
Yeah.
almost a year and a half. And I think that was really beneficial for us in a number of ways. It keeps your eye on the prize.
Yeah.
You have to really be diligent about identifying what success is from a metric standpoint and rushing towards that success. It keeps you honest about hitting your metrics and really focused. For our first investors, honestly, because we were a hair startup in San Francisco in 2011, it was something that a lot of VC investors especially didn't understand and weren't passionate about.
Okay.
Because most investors are men. And especially at the time, it's not like it was 20 years ago, but
Sure.
this is a fast-moving industry.
Yeah.
So in 2011, it was fairly different. And got a lot of no's from traditional VCs.
Yeah, how many
even
no's did you
smaller.
get?
I mean, so many.
Yeah,
So many.
more than you could count
So
on
many,
hands.
yeah. So it was basically our first seed round was a bunch of angels,
Okay.
my friends,
Oh,
essentially, that were like, we don't understand beauty, we don't get this market at all, but you're a hustler and we believe in you and Dan. So that was how we raised capital. And already at that time, we had thousands of users that were using us every day, and the product was growing at a fast clip, 100% organically. So we had a lot of proof in the product and showing that, this customer will use technology and it's actually very useful for them.
Great.
So that helped.
Yeah, so your friends, your family, people that believed in you, but also saw that your business was picking up, there was momentum, there were people who were interested in the product.
Exactly.
Got it. So you've raised a pretty sizable seed round at about $4 million, and most seed altogether is around 1 to 3. So, why so much capital, and how did you get access to all of it?
Yeah, we did it in a couple of different notes. So it's not like it was a full $4 million round at once.
Okay.
We raised a little over 700 in sort of the first note at one valuation, and then a little bit later as we had more proof points and as the product was growing and the community was growing and it was clear that we were onto something. But especially for us, because we were building back office tools, it takes a decent amount of time to make them right. It's not like a consumer app where you can, this is oversimplifying, but you can sort of put something out there and see growth or not. This is the type of thing where we had one developer who was Dan, and he was building something that was steadily gaining a lot of traction, and he was building amazing product that customers were loving that hadn't existed on the market, but we needed a little more time. So we were very, very lean in those early days, but we raised a couple of different notes together to make up that 4 million seed.
Got it. And as you were doing that, how did your investors shake out? Like, did you have new investors that came in for each of the notes, or did you have people that put more money in who already believed in the business?
Yeah. So in the beginning, it was individuals, and then it's slowly moved into more micro VCs.
Okay.
And as it was clear that this is a business that's going to raise more capital in the future and that there's a lot of proof points and this could be a big business, some of the larger players came in and said, we want to get in on this business. It was definitely a lot of investors that understood back office sort of SaaS types of companies in the beginning, because that was what our dynamics were. Even though, we wanted to be a marketplace, for the first 2.5 years of the company, we were full back office tools. So even though consumers used us, it was we just cared about all the consumer engagement, and those were our KPIs for the business.
Got it.
And it wasn't until we launched at TechCrunch Disrupt that we actually turned on StyleSeat.com as a marketplace and started to move towards a transition of becoming a true marketplace.
And at the time when you were talking to your micro VCs, your early investors, how were you pitching the vision to them to get them on board?
It was, we want to be a marketplace. We think that we're going to be the largest marketplace in the space.
Yeah.
But in order to get there, we need to become the largest back office tool for stylists first.
Interesting.
So that's actually it's a hard way to go, and it's a slow way to go, but ultimately puts you in a much stronger position. So for us, for example, today we're in 15,000 cities. We have over 300,000 stylists that use us on a regular basis, and almost 100% of that growth has been organic and word of mouth. And that's because we have such powerful back-end tools for them. The average stylist can double their revenue in the first 15 months of using StyleSeat.
Wow.
Just about. They grow by 70%. So because that's so powerful, that has led to our growth. But that meant that we had to really build amazing tools, which takes years. So it was slower in the beginning, but that's allowed us to really move faster.
Got it.
Towards in the past couple of years.
Yeah, and the investors were okay with that initial slowness. They weren't like, come on, Melody, step on the gas.
Yeah, I mean, business tools take time to build.
Right.
And those types of investors understand that timeline.
Okay.
It wasn't until we raised later rounds where it was more apparent that we were much more consumer marketplace. And the investors that were interested at that stage was less of the back office SaaS investors and more of the marketplace consumer investors.
So you went out and actually targeted investors who were more business focused and didn't talk to the consumer internet guys as much.
We did.
Okay.
But it was more, these guys get it.
Yeah.
Because they have all these businesses in their portfolios and they understand the metrics that we're paying attention to, why the timeline. And as the business started to evolve, which was always the plan, and we were very clear with everyone about that, but as marketplace became our focus and our metrics and our KPIs and sort of our roadmap, that's when more of the consumer marketplace investors stepped in because they understand that stage of the company.
Okay, and they started to take more notice and were interested.
Exactly.
Now, last year you did a Series A, which a lot of people out here and even, as far as the East Coast and even Europe claim is the hardest round because there's a lot of companies getting seed capital, 500, 750 or $1 million, but then there's this jam that takes place once you get to the Series A. What was that process like for you to go out and raise a large Series A?
Yeah, it was about 1.5 years ago. It is challenging. I would say it's the difference. Rounds previous to that, you're raising on your vision and market size and your confidence in getting there, I should say, and your ability to convince someone that you can get there. Series A is all about numbers.
Okay, so what numbers were they looking for?
At that time, we were the fastest growing platform in the industry with marketplace components.
Sure.
was how I pitched it.
Okay.
Because we were still really back office. We didn't launch our consumer app until less than a year ago, actually in September. And this was, because it was 1.5 years ago, this was pre our consumer app. So, we were saying we're fastest growing back office tools for this industry. We have ambitions to be a marketplace. We believe that we can be the largest when we launch. And we actually took one meeting with Lightspeed. They had preempted our round, and then they decided to invest that day.
Oh, wow. So did you have other meetings before that, or you just had one meeting and they were pretty excited to invest?
we were very lucky because they were involved months before we had even started the process. And so there were a lot of conversations that led up to that meeting. It wasn't like this is the first that they'd ever heard of StyleSeat. So they'd already gone through numbers, and we'd already talked about our philosophy to build the business and how we were going to do that and our approach and everything.
Got it.
So we're all very aligned there, but that was the time that the partnership could really look at the deal and meet Dan and I in addition to reviewing the numbers and make a decision.
And what was that process like, the due diligence process, as they were looking at you?
Yeah, I mean, I think it's different for every firm, and it takes different amounts of times for different folks. Because we had already gone through so many numbers with these guys leading up to that meeting, diligence was fairly quick. Nothing was a surprise. It was basically, let's just make sure that, financially and from a metric standpoint, everything lines up with their expectations and what we had told them, which it did. So it wasn't too intense. But I think having that relationship with an investor leading up until that point was very helpful and helped us give them the information that they needed along the way. So it was a little less of a arduous process when it came down to it.
And did you have introductions to them, or had you talked to them during your seed? How did you go about?
They had approached us.
Oh, okay.
Which was great. And when an investor puts that much effort and interest into your business, I think it helps because they're really passionate about the business. When you're looking for a new board member,
right,
it's exactly what you want, is someone who is really into the dynamics of the business and wants to build a relationship with you and wants that to be a long-term relationship.
Got it. And in terms of the numbers, was it about revenue? Was it about user acquisition, or was there a package?
Yeah, our pitch for the most part was, we're the fastest growing. Here's what the market looks like. It's massive. It's a huge opportunity. There's really interesting shifts in the breakdown of labor. There was a big movement from professionals being employees to independent contractors, and we were helping to drive that movement. So very similar to what's happening in transportation and a lot of other verticals. Here's what the competitive landscape looks like. Here's, we're growing much faster than these guys, and here's how we're going to leapfrog them. And here's how we're going to actually completely transform the industry. And so it's, again, because that had been several months of conversation, it was something that they were excited about. And, we had the opportunity to show them what we were going to build and how we thought that would be successful.
Got it. And your Series A was about 14.1 million, is that about right?
The seed was 4 and the Series A was 10.2.
10 million. Okay, 10.2.
Yeah.
So what did you use that money for?
Team.
Team.
We've done almost zero marketing to date. We actually don't even have a marketing team, really.
Oh, wow.
So
that's fantastic.
Maybe
we don't want to tell the audience for people that want to apply to marketing positions.
Yeah, if you're interested in marketing at StyleSeat, please call me immediately. We're looking to build up that team for sure. It was mostly around building out the team. So getting more engineers on board. Data science has been a huge push for us. It's the majority of the company, product engineering and data science.
Okay. So
really, really building out that team and our competency. And, when we first launched our consumer app in September, we were like 2 stars.
Oh, no. Yeah.
It was just, we were so lean,
right?
Because at the beginning of last year, we were like 6 people or something.
Yeah.
Today we're 45.
Oh, wow.
So we've grown tremendously.
Definitely.
But our app is almost 5 stars at this point, and all of our metrics have gone through the roof. So
yeah, how did you have to get through that period? I'm sure for a lot of people, your team, your investors, they might have looked at that and been like, what's going on?
Yeah. Well, that's not like an email that you send like immediately, but it was like, here's the first pass.
Yeah.
And here's our plans to really improve this and make it better.
Okay.
So we have an awesome product process. So we do, 2 to 4 releases a week. We're constantly A/B testing everything across the board. So always our metrics every single week and every month are growing. So part of it is like, this is what we are, we're really lean, our team's really small, but here's all of our ideas to make this better. Here's designs for how the app is going to look. And then here's our process to A/B test to get metrics through the roof. So like in December, the conversion of a brand new client coming to StyleSeat and booking on our mobile app was like 1%. And today it's over 9%.
Oh, wow.
So it's fun to see like the steady iteration and how that improves metrics over time, and it's encouraging for the team and for everyone.
Nice. So what led to the decision to go out and raise a Series B? I know you just closed, it was 25 million. So what was the reason for raising more capital?
Because it became more and more clear that this continues to be a massive opportunity and that we're best positioned to step up and take it. $80 billion is a lot of money in the space.
Is that just US or is that?
That's just US.
Okay.
And so it's hundreds of billions globally. And this year we'll do over $1 billion in appointments booked across the platform.
Wow.
So that sounds like a lot, but it's just a tiny piece of market share, and growth has continued to increase. So, it was a matter of me and Dan sitting down, looking at the metrics, looking at the opportunity and saying, this is actually very clear that we have a pretty good shot at being a big business. Let's go out and raise the capital so we can do it faster.
So what were the major differences between your Series A versus your Series B?
Our Series A pitch was we are the largest platform in this industry, fastest growing with marketplace ambitions. And our Series B pitch was we are the largest and fastest growing marketplace in this industry with a real shot at turning on international.
Mm-hmm. And what is it about the marketplace that you really want to focus on?
I'm really excited about turning on marketplace economics. Mm-hmm. It is because historically we focused on positioning ourselves to be the market leader and on growth. StyleSeat today is free for a stylist to run their entire business. We double their revenue, as I mentioned, just with our free products. And if a stylist would like enhanced scheduling and marketing tools, they can pay us around $30 a month for that.
Okay.
What we're going to be evolving our business model into now that we are as big as we are, and we are a great source of new customers for our stylists, mm-hmm. is adding an additional tier where we'll allow stylists the option to pay for new clients that we drive them.
Oh, wow. That's great. So lead gen for them, which is what they struggle with.
Exactly. Yeah. They're new entrepreneurs. The beauty industry is a really tough space mm-hmm. as a professional, and they don't have a lot of options when it comes to growing their business. They can either, pay a review site a monthly fee, or they can pay a daily deal site 75% effectively, right? Because they're cutting their prices in half, and they're getting customers that are deal surfers, et cetera, and they're not going to come back. So what StyleSeat will be is an awesome source of new clients for them. We'll take a 40% one-time fee and a 10% ongoing fee.
Okay.
So the economics are much better. They make money off of the first appointment alone. And then with our client retention tools, we're going to hustle as hard as we possibly can to make that client a long-term client.
Got it. That's great. Yeah, to really be embedded in the life cycle of their business.
Yeah, exactly. And, in this respect, because we're taking a percentage, we want to maximize the revenue that the stylist is getting every single time and over the course of their business. So
that's a good alignment.
Yeah, exactly.
Wonderful. So we've talked about your 3 rounds of funding. We started with your seed, then we talked about Series A and Series B. Let's just take a holistic view for our viewers out there. With the seed, you said, what was the most important thing to getting that seed investment?
I think building relationships mm-hmm. with the right investors, targeting the right investors, and having a really great pitch. Having, a good idea in a market that is interesting, right, with a novel approach, and mm-hmm. then having solid pitch with great content, great delivery to the right people.
Mm-hmm. And then where did metrics play into that?
Metrics don't play into it as much.
Yeah.
It's more about, here's my vision, and this is how I want to change the industry. For us, because the industry that we're going after is just so far away from the personal interests of investors, we had to also show numbers. And so it was a combo pitch for us. But I think for most seed pitches, it's, this is an awesome industry. The way it exists today is horrible.
Yeah.
We're going to fix all of that. The world will be a better place, and we can make a lot of money.
Got it. And then for your Series A, what was the takeaway from that?
That you have to have great growth. Mm-hmm. So the performance of the business has to be great. You have to be able to say that you've done the things that you set out to do, and be able to show that you can do the things that you still want to do with the business, and that's a big opportunity.
And for B and beyond?
Business is growing. We're going to grow it even more.
Okay. So local, international, a lot of new markets.
Yeah.
Wonderful. Okay, last question for you. Mm-hmm. For all the founders out there, I'm sure they're wondering, what are just 1 to 2 things that you think are really important to get through that fundraising process? I know you've been pretty optimistic about it, but not everyone's going to have the smoothest ride. So what do you think is important to keep in mind as they're going out and fundraising?
I would say, first of all, we did not have a smooth ride.
Oh, okay, good.
Want to know. Good. Even if your business is great, fundraising is challenging. No one starts a company because they want to fundraise. Not many founders that I've met love fundraising. So it's okay if you're totally intimidated by the process, and
that's good. That's good for them.
It doesn't come naturally to you, because it did not come naturally to me at all. I would say find a great advisor. I had kind of the best in the business, and someone that has raised a lot of money and has raised money recently, so that they understand the ecosystem and the players, and they can help you run that process, because how you run the process is incredibly important. So I'd say find an incredible advisor or series of advisors that can help you and work with you along the way, and help you with every email that you're sending to investors and how you're responding and how to speak investor language, because you don't know that unless you've raised money before.
Right.
And then I would say have an amazing team, right? Whether that's a co-founder, Dan Levine is my co-founder, he's incredible. And we were able to do that together sort of along the way. So that was, without him, I don't know if I would have been able to do it.
Well, that's great. Thanks so much for coming on the show and
Thank you.
And sharing all of your fundraising process and how your business is growing.
Thank you. Yeah, thanks for having me.
So is there anything else you'd like to share with our viewers?
We are hiring. I would love especially to get more lady engineers on our team. We have a couple, we need more. Engineering, data science, products, marketing, anything.
Great.
Please apply. We're growing very fast.
Awesome. Well, we'll be sure to include a link to your careers page.
Awesome.
So that's it for our 8th episode of FemGenier TV. Thank you, Melody, for joining us today.
Thanks for having me.
Yeah, it was fun. And of course, to you, our viewers, for joining us, and our sponsor, Pivotal Tracker, for helping and produce this episode of FemGenier TV. If you've enjoyed this episode, then please share it with your friends, your teammates, and your boss. And subscribe to FemGenier's YouTube channel to receive the next episode of FemGenier TV, where I'll have special guest Shruti Gandhi, who's an investor and founder at Array VC. This episode of FemGenier TV is brought to you by Pivotal Tracker. Build better software faster. A silent film. Yeah, that'd be awesome. We should do that. It helps to be interviewing the CEO, I guess.
Yeah, we had CEO of Pivotal. We have.
Hey, it's Poornima. As you know, I'm working on my second book. It's called Present, The Techie's Guide to Engaging an Audience. And this time, I'm co-authoring it with Karen Catlin.
Poornima and I are both technical women who have given hundreds of talks, but in the beginning, they weren't all exactly great. Now we have studied the greats, we have learned from our mistakes, and we wrote the book we wish we had had when we started our public speaking journey.
The book is available now for pre-order, so check it out, and if you like it, which we're pretty confident that you will, reserve your copy today.